Right now, we are in an environment where interest rates have been going up super fast and super furious. Because of that, savings interest rates and bond yields have also been going up to record levels. So in this video, I want to share what's the best place to park your money so that you can earn as much interest as possible while having little to no risk of a sudden interest rate drop or losing your money. As a bonus, I'll be sharing a limited time only high interest bond fund offered by Tiger Brokers, which might be attractive to some of you. So be sure to stick to the end to find out more. Okay, with that being said, let's start with the most common method to park your money: high interest savings accounts. While there are many savings accounts to choose from, the clear winner here is the OCBC 360. Here's why. By crediting at least $1,800 salary to the accounts, you will immediately earn a super high 2% interest on your first $75,000. If you can do that, you will earn a minimum of 2% interest plus the 0.05% base interest. That is 2.05% interest by just crediting your salary. Check out this chart by Sidley. You will see that with just the 2.05% interest, OCBC 360 is already giving the highest interest compared to all the other banks. But that's just the start. The more savings you have, or the more categories you fulfill, you will earn even higher interest. You will first earn a 0.05% base interest. So let's say you have 100k in savings, credit at least $1,800 salary in, that's additional 2.5% interest. Increase your average daily balance by $500 every month, that's another 1.5% interest. Spend with the OCBC 365 card, that's another 0.6% interest. If you can do all that, in total, you will earn a super duper high 4.6% interest. But wait, there's more. If you sign up for the OCBC 360 account, credit $1,800 to it, you will earn a $118 cash reward. Or if you can do all that, plus sign up for one of the cards and make 5 qualifying transactions, you will receive a $150 cash rewards instead. Hosebo. So that's savings accounts. This method is good for parking money that you need immediately. Moving on, cash management accounts. There are two kinds of cash management accounts here. One is by ROBOADVISORS, another is by brokers. Let's talk about ROBOADVISOR cash management accounts first. Currently, they are offering anywhere from 2.6% all the way to 4%. But the important thing to remember is this is an investment, not a savings account. So there's risk of losing money. For example, we saw that the Endowus Cash Smart higher yield portfolios actually gave negative returns this year. So don't just blindly go for the one with the highest yield, because with higher returns comes higher risk of losing money. My advice is just go for the portfolio with the lowest yield, like Endowus Cash Smart Secure, or Stash Away Simple, or Safe Cash Plus, where you will already get around 3% yield. So that's cash management accounts by ROBOADVISORS. This method is good for money that you don't need to use immediately, but you might need within the next few weeks. That's because if you want to withdraw, you will need to wait for a few days before you can get back your money. As for cash management accounts by brokers, currently there are 4 brokers that have cash management accounts: Tiger Broker, Mumu, FSN1, and IBKR. All of them are currently giving around 3% yield, which is around the same yield as offered by ROBOADVISOR cash management accounts. But the main benefit of using this method is that by parking your money in brokers' cash management accounts, you can invest the money immediately if you want to do so. And as usual, the brokers are very generous with their sign-up rewards. For example, if you sign up to Tiger Brokers, deposit $1,000, make 5 buy trades while maintaining $1,000 account value, you will receive a free Grab stock, an $88 cash reward, and of course, commission-free trades. As a bonus, if you use my link to sign up by 30th of November, you will also get another $20 stock voucher and a GoPro share for free. But wait, there's more. By using Tiger Brokers cash management account, aka Tiger Wallet, if you are a first-time user, you will receive a 20% cashback coupon. Additionally, all users can also enjoy an 11% cashback as part of their promo for the month of November. So that's cash management accounts by brokers. This method is good for parking money that you are planning to invest soon. Next, the super popular Singapore savings bonds. SSB use have been going up, and recently it has hit an all-time high average return of 3.47%. Now, just in case you don't know how SSB works, basically SSB is a 10-year bond where the interest goes up every year. The good thing about SSB is that you can redeem anytime you want and you will get back your money within 1 month, including accrued interest. Because of that, you won't lose any money by investing in SSB, unless the Singapore government goes bankrupt and can't afford to pay you back the money. But if that happens, we have bigger problems to worry about, yeah? As for the downside, there's an investment limit of 200k per person. And because of how popular it is right now, you can only invest up to around $10,000 every month. This method is good for parking money that you don't need in the next 1 month, but you need within the next 10 years, like saving for a vacation next year, or saving for a wedding with your honey. However, if you want to invest a lot more than just $10,000 every month, SSB wouldn't be a good choice. Instead, you can invest in SGS and T-Bills. SGS is a long-term bond that matures anywhere from 2 years all the way to 50 years, while T-Bills are short-term bonds that mature in either 6 months or 1 year. Similarly, both SGS and T-bill use have also been going up steady from PP. Not to the moon, yeah, just steady from PP. The last SGS bond yield in October has gone up to 3.28%, while the latest T-bill yield in October hit a 30-year high of 4.19%. The good thing with SGS and T-bills is that there's no maximum amount that you can invest. You are only limited by the total amount offered, which is usually a few $billion. So unless your whole kampong comes and buy up the bonds, it's almost impossible to max out to the full amount. Also, a bonus benefit is that you can actually invest your CPF money into SGS and T-bills. That means instead of just earning a 2.5% interest from CPF OA, now you are earning 4.19% interest from T-bills, and that's amazing. However, the downside of SGS and T-bills is there's no early redemption. The only way to get back your money early is you have to sell it on the open market. The problem with that is there's very little trading volume for them. So if you were to sell the bonds, you will get a very bad spread and get lowballed, like what usually happens in carousel. So that's SGS and T-bills. This method is good for parking a large amount of money for a fixed period. Moving on, banks' fixed deposits. Now, I know that fixed deposits have a bad reputation here. That's because 1. The interest is not that high. Like currently, they only give around 3 to 3.9% interest, and that's already the promotional interest, yeah. The normal rates are even lower. You will easily find a better return somewhere else, like T-bills, which is easily giving a 4% return now. And second, your money is not liquid, yeah. If you try to withdraw anytime before it matures, there will be an early withdrawal fee. So why did I introduce fixed deposits? That's because this method is actually super good for earning high interest on foreign currencies, because the foreign FD rates are actually quite good. Check this out. DBS is giving 4.5% interest when you deposit 10,000 USD for a 12 months period. So in summary, even though you can't earn a good interest rate on SGD deposits, fixed deposits are a really good way to earn high interest on your foreign currencies. However, all of these returns still pales in comparison when compared to Tiger Broker's time-limited offering, the United Fixed Maturity Bond Fund 1, which is giving a 4.95% return, the highest return among this list. Here's how this fund works. This fund has a 3-year maturity period, meaning you will have to hold it for 3 years for it to mature. But if you want to redeem early, there will be a 2% early redemption fee. Every year, you will receive around 4.95% returns annualized, with dividends of 3.5% per annum paid out every 6 months. But just take note that the 4.95% return is just an indicative return, yeah. So the actual amount can vary. The investment manager for this fund is UOB Asset Management. And just in case you are wondering, this fund is an exclusive offer between Tiger Brokers and UOB Asset Management, which means that it's only available to customers of Tiger Brokers. The fund will invest in a portfolio of bonds globally. And here's the most important part. The sub-fund will not hold bonds with a rating of below BBB-, because anything below that is all junk bonds that have a higher risk of defaulting. While on the other hand, according to a report by the S&P 500 Global Ratings, investment grade default rate have always been less than 1%. The fund manager will use a buy and hold strategy and will be investing in bonds with different tenures. But they can replace or dispose of any bonds depending on the opportunities or fundamentals of the issuers. So because it's a bond fund, the usual risk applies, like market and credit risk, liquidity risk, forex risk, derivative risk, and distribution risk. So to minimize the risk, it's best to hold the bond fund till maturity. As for the fees, there's no management fees on Tiger Brokers side, but fund level fees apply. This fund will only be available for a limited period from 14 November 2022 to 28 November 11 AM or while stock lasts. So if you are interested in subscribing to this fund, you can just open the Tiger Brokers app, go to quotes at the top, look for funds. Here you will see the United Fixed Maturity Bond Fund 1. Tap on subscribe. Then just key in the amount that you want to invest and you are done. You will receive a 10 days 15% cashback, which will be deposited into your account after 10 days. So that's the bond fund offered by Tiger Brokers. If you want to learn more about the fund, you can check out the website, which I will link down in the description below. This method is good if you want to earn a very high return on the money that you don't need within the next 3 years. In conclusion, in this high inflation environment, it's super important to park your cash somewhere to let it earn a high interest. If you can do that, it's possible to earn a few hundred or even a few $1,000s worth of interest every year. And that is a lot of money, yeah? Anyway, that's all for this video. Hopefully it helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.